What's up, trade pros? It's Victoria from Tradepro Academy, and today we've got yet another special video for you guys. As you can tell, we're still in quarantine mode. I am filming from my room and from my home setup. So today, what I'm going to show you is not only how to trade from home in your room during this quarantine with the potential of great opportunity, but also this amazing order flow trading strategy. This is an order flow gold mine, as I like to call it, because I really love this trading strategy. What it encompasses is the directional move that confirms a level of trend and the retrace to catch that with high probability on the order flow front using the footprint in front of me on the screen here. So without further ado, smash that like button, hit that subscribe button, and we're going to go into this order flow trading gold mine strategy. Now, I must warn you, this is not the be all and end all. It's not the holy grail. It isn't the one thing that you need to become a multi-millionaire trader from $100, but it's a great tool to understand and to put in your arsenal. This encompasses two different components, and let's get right into them. Before we do start this, if you guys want to know more about order flow, after you've seen this video, before you've seen this video, we've got a great order flow free course in the description. Go check that out. It's amazing content, guys. You're going to understand a whole lot more about the footprint and inventory. So let this be a little lead into that. I hope you guys enjoy this video, and let's go ahead. There are two components to this strategy, and they're both seen on the footprint. So we're mainly going to identify trades and the trading strategy throughout the footprint on this video. Now, we are going to use market structure naturally. We love market structure. That's where we start. But the footprint is going to be the main focus in how we use the footprint to confirm these trade trends, breakouts, whatever it may be. This whole strategy as a combined tool, we will need that footprint. So let's go ahead and get started. The two components are, first, we identify a level at which price consolidates on the footprint. So sideways movement, rotations, something of this sort. So after we've identified the market structure, we do have bear trends here on the range bar. We move over to the footprint and identify those last key components that puts this whole strategy together. So if we are just skipping the market structure for now and we can confirm that it's a bear trend, everything looks good, lower lows, lower highs, we then move into the footprint where we look for areas of consolidation. So what do these areas of consolidation look like if we make this big? Areas of consolidation on the footprint are just sideways rotations you can see right here of price. It's consolidating in a tight little range, and we don't really want to act upon this yet. What we're waiting for is a confirmed break. That is the second part of this, the second component. After identifying the consolidation, we look for that extended strong move of momentum where we will look for the pullback, where those strong market participants that entered at market are trying to hold this guy out. Now, we're going to show you multiple scenarios in which we like to see this. So two components, consolidation and long momentum candle. That's what we're going to remember for now. So we'll be using a 5-tick reversal footprint. This is what you guys see in front of you. It's on the Sierra Charts platform. So every time the price reverts 5 ticks, reverses 5 ticks from its start, so start to finish 5 ticks at a reversal point, we will print a new candle. So we got some great Sierra charts set up and videos on our YouTube page if you guys want to check this out, if you guys are interested in the platform, but let's focus on the strategy for now. So this is a patient trading strategy with order flows we identified. We want to identify an area where the fight is happening throughout the trend. So if we have identified the fight area, we confirmed first that the structure is to the downside with the range bar. So now we're just identifying the fight. If we can identify where the fight is, what we want to see is who wins this fight. In the downtrend, we're expecting the bears to win, but we don't know for sure when or where they'll win. So if we wait patiently enough to see where they do win with these long extended candles, so to the downside on a bear move, if you get consolidation, 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 and an extended red candle, this confirms that the bears are in the driver's seat. This candle right here confirms that the bear side is the right side. And what we want to identify in this bear side momentum shift is strong sell imbalances. Now, if this candle came out a red candle with no sell imbalances, this kind of kills our idea. There's not that many market sellers. What the imbalances either mean are market sellers. So either limits or stop losses, but they're market sellers. So that kind of identifies an area which they want to hold their structure. So these market sellers want to hold those levels so price doesn't go past them, because if they're not stops, we have no way of knowing if they're stops or limits. If they're not stops, that means that these are stops getting filled as price moves back through them. So we want to identify those strong market sell areas on these extended momentum candles to confirm the downside structure. So at a resistance point, if we're looking at this bear structure right here, at a resistance point, we want to see market sellers come in, and especially through this extended candle. On the buy side, as support, if we have upside structural support, we want to see a green extended candle with a lot of market buying, and market buyers come through that resistance point trying to hold it as support on the way back down. Now, this trade strategy encompasses the pullback. Where is the pullback in this long extended candle? If you guys are noticing, you can see sell imbalances scattered throughout the whole candle. Is the first sell imbalance going to be that ideal area for the pullback? Maybe, maybe not. But what confirms a stronger level is stacks. So if we have multiple stacks, 2, 3, 4 stacks of sell imbalances coming together, clustering price, that is the area that we're expecting the potential pullback and for them to really stall. So you can start off from the bottom to the top on a sell candle. So the first level right here, we're expecting to see the stall. Okay, second level, we're expecting to see the stall. We break above it and slowly start to trickle up into these strong double stacks of sellers. This is where we actually see the first rotation and reversal of more sell imbalances and more sellers coming into play, which triggers our potential entry idea based on that. So what we're looking for is the drop in momentum, the pullback, maybe a little more consolidation. Doesn't have to be consolidation, but we want to see price actually stall at those strong sell imbalance levels with more market sellers trying to come in and get that push lower. Now, what you could do is just identify those last levels of resistance if some of these first ones break, or those huge stacks of sell imbalances where they might hold out, and look for entries there. So one is right here for the continued move to the downside. Now you could do the same thing here, but the trend kind of starts to stall out. You see a triple stack right here. What happens? Why is this not as good of an idea as this? Because this triple stack gets erased pretty quickly, and what happens is we get into the last level of sell imbalance on this extended candle before the actual push lower. So we want to see where that price stalls out. Sometimes it might be the last level of sellers on these long extended candles, these market sellers. Sometimes the first level of these sellers. Depends on the volatility of the market and the market movement. But what we wait for is confirmation. It's not a blind limit when we see this triple stack. Okay, I'm going to sell it right there at that triple stack. Let's see how the second candle actually forms. If there's a potential of failure at that level, then we start looking for the entry. There was slightly, but this is where the failure actually came out, where this sell imbalance came out with a red candle at the top here, and what you're looking for is the entry for the continued move to the downside. Some of you may be wondering, why don't we enter at these consolidation levels when we find them? Well, the reason for that is they could be head fakes and we can get a pop just slightly above those consolidations before we get this drastic drop lower. Yeah, it does make sense if you manage to catch the tops of the consolidations and ride it down for the more extended move and capture this downside. But sometimes, like I said, we might get the head fake stop you out before the move lower. The idea behind waiting for this drop and catching it a bit lower on the price end to sell is because you're getting a confirmed level of actual market selling and aggressive momentum to the downside. So if we look at some more examples here, you can see this is another area of consolidation that we've found. So you can see it's still the downtrend, and what you're identifying is consolidation in the footprint. You can see the sideways movement here, and what we're doing is, yeah, you can enter at these sell imbalances towards the top, but you do get risk head fakes above that level. So for example, if you're selling some of these sell imbalances and it comes back in, pops its head, you get stopped out before this continued move to the downside. So if we wait for this continued drop right here and we're looking for the sell imbalances, remember the first sell imbalance, maybe this triple stack right here, let's see where it actually plays out on the retrace, and we can capture that more extended potential move to the downside, right? So we get that drop lower, it continues, and what happens? We come back into these strong market sellers. You get one chance here, and then the retrace right here for the continued move to the downside. Now, again, at this point, you see it drop. You may have missed a decent amount of the move, but what you're doing is increasing the probability of your potential trade going your way. Again, if we find a strong level right here, consolidation, then the drop, what happens? This huge candle just prints back up and it kills that idea. So it's better to let it kill the idea than get in aggressively just to get stopped out, right? So if we're continuing still in the downtrend and we notice the reversal, how do you notice a reversal? You get this nice green extended footprint candle right here. It's the same thing. Where do you notice the double stacks? First, initially here, that get kind of wiped out. Then you have a double stack right here. This is the area that you may want to look for the entry to confirm that upside push, right? Or if you get another extended candle like this, you've got multiple buy imbalances, stacks for the move higher, right? So you see how it works to the upside as well. Now, again, we're in a consolidation phase. The overall trend is to the downside. You can see the consolidations here. Yeah, you can be entering somewhere here towards the top, but what you're seeing, you're not seeing any of this. You're seeing the real-time action of buyers actually trying to step in and accumulate this. So you wait for that extended pop to the downside. Look at this momentum shift to the downside on the footprint right here. And where do you have your stacks, right? Where are your sellers? Double stack right here. You've got your stacks right here. What happens, right? You get no real market sellers coming in, but when you get that pullback into these strong sell imbalance levels, not a single market buyer wants to come in, and that is your chance for the continued push to the downside. And there goes that trade to the downside, extended move lower. Now, this is a great market strategy, day trading strategy for the futures market in order flow. I showed you guys the S&P 500 example here, but it all starts with the confirmation of the range bars, right? What you're looking for, again, is a two-step process. After you've identified the range and the trend on the range bars here, what you're looking for is a consolidation area in terms of sideways movement on the footprint. Then you're looking for that momentum push to the downside or upside. And then you're looking for those market buyers or market sellers to hold out that level and confirm the continuation of the move. Now, sometimes it doesn't really work 100% of the time. That is because you're not identifying those really strong market structural areas, right? So what we want to do is identify the market structure area first, then we look at the footprint. You're also not waiting for the confirmation, even on the footprint, on the pullback, to tell you that that area is going to fail, the area that you have in mind after that momentum push, right? So we showed you an idea where it might not work, but that's because there was no confirmation there. You want to wait for it to show that there are more sellers coming into this market, that the buyers can't push this thing up. So if you guys enjoyed that video and you want to learn more about market structure and order flow, description down below. Now, I want you guys to smash that like button and subscribe and tell me what you want to see down below. What did you guys think of this? What do you guys want to learn next? And we'll go from there. This is Victoria from Tradepro Academy, and I hope you enjoyed this video.